Hello, everyone. Good morning, and welcome back to a new named show here that we're going to be working on, Man and Machine. I'm Dillon, joined by my co-founder, Ben, and Mark Phillips from Harvested Financial. Gentlemen, how are we doing this morning?
Doing good. Good week.
Morning.
Good morning. Glad to hear it. Coming off of another, was it a bad sports weekend for you again, Ben?
Oh, yeah. I mean, Giants never do well. Jets won.
Which is like, okay.
At this point of the season, you kind of don't want to win.
Mistake.
So that was a very Jets thing to do.
Very much a Jets thing to do. Anyway, we got a very packed show here this morning. Excited to get into things. We're going to take a very quick look at our PeakBot picks that expired on Friday, see who's going to take the victory for last week. Of course, we got stocks in real life, one of our favorite segments here on this show. Today, we're talking about Starbucks. So stay tuned for more information and our experiences, both trading that stock and just our experience with the brand, and a number of other things. We'll take a look at maybe our model portfolios. We'll do some economic events, SPY analysis, and more. So thank you so much and for being here. And let's get into it. What do we say, Ben? Do we want to get started with the PeakBot picks?
Let's do that. I will pull up my screen in just a moment here.
Awesome.
And then we can go through and find out who won.
Excellent. Let's do it. So we're going to when we took a look on Friday, Thomas and I both had 3 for 3 in the green. Ben, you were kind of slagging a little bit, 1 for 3, but that's okay. Let's kind of see how we're doing. We'll just knock mine out of the way. I'm trying to stay above $94 on Walmart, which when we were looking at this, it was close.
It was the closest it's ever been for you.
I'm scared. Oh, okay. Honestly, seriously, I'm going to have to go and pull some data on this. I don't know that this thing has a contract on either our trend spread or the wheel has finished in the money in months. I mean, months. All right. Just skated by there for $25 in premium. Netflix. Okay. Walmart and Netflix, both former stocks in real life topics. I was bullish on Netflix trying to stay above 907.5, and I did.
You did.
Love it. Into ticker INTU, into it. Bullish, $640. I was trying to stay above.
3 for 3.
Wow. Yeah.
All right.
Top
You
city
held.
right here. This is a fun chart to look at. 3 for 3. All right, Ben. Let's see if you just can revitalize anything quickly. VST 152.5. You're bullish on VST 152.5. Not good.
Next.
Not good. One of your old reliables in this contest, Coin. Let's see how Coinbase.
I wouldn't ever call Coinbase reliable.
Reliable in this contest. Tell me you don't pick Coin often.
I don't.
And it wins for you often in this contest. Go ahead.
Check
Let's see.
the record. I've only picked it like twice.
All right, whatever. 320. You're trying to stay above for $546 in premium. Would have been nice. 546. That's crazy. Okay. Yeah. Ticker Onon. ONON. Bullish. Ben's collected 19 in premium. Just try to stay above 57. Just
the only winner.
That wasn't. Winner. Yeah, that wasn't going in your favor on Friday. Nice recovery.
Yeah, well, I want to point out too that this ticker paid out the least amount of premium. Still a decent ratio, premium to amount cash I needed to have set aside for the trade. But that's the new dynamic of how we're doing picks. Premium matters.
Premium matters. You got to assume somebody's going to go 3 for 3. By the way, Ben, big turnaround on Onon there for your win rate. 1 out of 3 hurts. 2 out of 3, you're Hall of Fame. So well done. Let's just wrap it up. Let's see if Thomas can beat me. He had really boring premium. So actually, yeah, just looking at it, I win. But let's see what he did. J&J bearish 152.5. Let's just see if he can keep this crazy win rate. He's above 92, above 90%. So he hits here. He was trying to stay below 152.5 in a bearish call spread. Pepsi, he was bearish on again, below 162.5. Nailed it.
Yep.
And McDonald's bullish, over 295.
Wow.
Okay, that's close. That one was pretty close.
The kid's good.
Little consolidation there. Yeah, so Thomas's win rate is going to be something like 92 or 93% off the win rate, off this watch list and in this contest, which is fun. So good week of PeakBot picks, particularly for this guy taking the W. Love to see it. That is your PeakBot picks. That'll be posted on socials, new win rates, new weekly leaderboard, and all the picks. So stay tuned. Awesome.
Cool.
Else?
Good stuff. Let's move right on into stocks in real life. How about that? Sound good?
That sounds great.
All right, Mark, I want to know, what is your Starbucks order?
I'm pretty vanilla. I guess actually no vanilla, but I like a nice plain black coffee, a grande.
So are you?
If I'm feeling it, but they're just so over caffeinated. I can probably only handle like 12 ounces of their coffee.
Yeah. So are you still going to Starbucks and ordering just black coffee? Is it worth it at that point? Does the coffee taste that much different?
I think the last time I stepped foot in a Starbucks was almost 3 years ago.
Yeah.
2.5, solidly 2.5.
I'm kind of with you there. Dillon, you're a Dunkin' guy, right?
Well, get your thoughts out because I'm going to take the mic for a second. So if you have any thoughts on Starbucks,
I'll get my thoughts out. When I was in college, I would go to the local Starbucks and get a lot of homework done there with a couple friends. So I got Starbucks out, but my order was also just a black coffee or a cold brew, which is basically the same thing. But I don't drink coffee anymore. I just drink tea.
Big tea guy.
So it doesn't make a difference to me if it's tea that I make at home or tea from Starbucks, because it's just you're using the same tea bags.
It's just tea.
Just tea.
Hot water.
Yeah, it's tea and hot water.
So for me, I'm a coffee guy. Over like the last year, I started drinking coffee. I used to drink it socially. I'm in the game now. I have one coffee a day, strictly iced. Don't come at me with your hot coffee. Yes, I will take a sip of my wife's pumpkin vanilla latte, but don't come at me with any of your hot coffee. I am a Dunkin' guy. Really, I'm a Stella Blue iced coffee guy. Shout out Barstool Sports and Big Cat. I do iced coffee that I make from home, but when I'm not up on my game and I don't have my coffee made, I do get Dunkin' black iced coffee. Now, this morning in the snow, I knew we were going to be talking about Starbucks this morning. I went and I got it. So I got my Starbucks black iced coffee, 16 ounces. I think exactly what Mark's order is. And let me tell you something. It's delicious. And I'm new to black coffee too. I'm on a diet. My guy goes, look, you don't have to cut coffee. Got to go black though. And I'm in. I cannot believe how quickly I've switched my mentality. I love black coffee now. This is a little dark, I have to say. Darker than Dunkin', certainly more expensive. Starbucks is.
How much that set you back right there?
My wife ordered it on the app. She got one. I got one, and we got my mom like a pumpkin loaf because she's watching the baby right now. Dude, I was in for like almost $20. So I'm sure it was that much. This had to be close to just black coffee. Seriously, $5, $6, honestly. I mean, maybe I'm wrong about that, but it is so expensive.
Futures are at all-time highs. I don't know like exactly today, but in the last like couple weeks, they've ticked to all-time highs. So coffee in and of itself is getting significantly more expensive. It's not like the cost of goods sold is going up. It's not necessarily Starbucks just ringing you for more.
Yeah. Although they were doing that even when prices are good, I'm sure. But I'll tell you this. I've traded. Now, if anybody else has their opinions on Starbucks, I was going to come in with some fun facts. This is a West Coast company, right? They started out in Seattle or something, I think. Yeah.
Oh yeah.
Yeah.
I was going to look at fun facts. I didn't unfortunately pull it up. Just some fun facts on this company. Been around a long time. When was Starbucks founded? Any guesses quickly?
The 80s. I think it was a small Seattle joint for a while before it went public. I think it's like late 80s.
Yeah, I was gonna say 1986.
Okay, so really quick, let's just show you guys. So Starbucks, 1971 at Pike Place Market in Seattle. I've been. Pretty cool. They're known for that's the fish where they're tossing fish and stuff. As you can see, Dunkin' been around a lot longer, 1948 out of Quincy, Mass. But anyway, 1971, longer than I would have expected them to be around as well. Do we want to talk about the stock? Let's talk about our experience with the stock. Since I'm already talking, I'm going to get mine out of the way and move on. Starbucks is one of my trend spread bots or stocks. I'm looking at Starbucks on the trend spread watch list right now, which I'll just pull this up quickly and I'll zoom in. So Starbucks is on trend spread, and I'm sure it's on the wheel as well. Bullish, low risk, loving it. That's a really nice EV above 372 pop on this particular play. It's a 12% ROI. It's only a $3 spread on nearly $100 stock, paying $36 in premium for a 7-day contract. So our max loss on it would be $264. Right now, it would be trying to stay above $96, and it's at $97.67. This is at least as of Friday. The market will get this data will be refreshed when the market opens. But I love Starbucks on trend spread. I don't like it on the wheel because it's too expensive. But on the trend spread bot with the spread anywhere from $2 to $4, paying that premium, still in a low risk category on a pretty good I shouldn't say predictable, but range bound stock. I like it. I'll shut up. You guys.
Yeah, I haven't traded Starbucks myself. I know that you like it, Dillon, and I know that you talk about your dad trading it all the time too.
Yeah.
So it's a family thing here.
Yeah.
I've got the chart.
Hold up.
I've got the chart here. And interesting to see like these big gaps here. I don't know what happened in April going into May. I assume maybe that's earnings. But I know that this bump up right here is when Starbucks announced their new CEO, who took over in, I think, September, probably around this date right here that we see a spike. Yeah, people were all about that change. I don't know too much about it. Mark, do you have any knowledge about that CEO change?
Well, so May, you're correct. That big drop was definitely earnings. Earnings in August was around the or very end of July. So that was that like little dip right where your cursor is. But correct. I think that transition it was Schultz handing back over control, correct?
Something like that. It was the announcement of the new CEO, and it was not that it was taking effect that day. I think it was just the announcement, but people were apparently super excited for this new guy to hop in and I guess run the ship.
I'll tell you what.
It was the guy from Chipotle, Brian Nickel. That's right.
Yes. Yeah, that's right. He was from Chipotle.
Maybe another stock in real life. Maybe we talk about Chipotle. They got a weird, isn't their ticker CMG or something like? They got I forget what it is.
CMG.
But, outside of these huge jumps here, okay, with some things happening, a lot of consolidation though, wouldn't you say? I mean, it is range bound. It
92 bucks to the high of 103 here. Yeah, it's a tight $10 range. That's 10% on a roughly $100 stock.
That's why it trades well for me on trend spread. So we're looking at 1 year. Can I be annoying and see all time quickly? I'm just really curious to know. Actually, let's see when they went public. Do you guys know?
Had some swings, right? Like it was pretty steady through the 2000s, and then you look the last 5 years, it's really been some ups and downs.
Yeah.
I've been a holder since 2014 of like 2 or 3 shares. Nice. I bought my wife a portfolio when we were engaged, a little Robinhood portfolio of some Starbucks, some Restoration Hardware, like some common names or whatever.
You hopeless romantic, you.
So a few shares on Robinhood, and we still have them. Like I haven't touched them at all. I rarely look at that account.
That's a nice return.
But Yeah, but like there have been some ups and downs for sure, right? Like you look at the broad market since 2014 and we're up more than that.
Yep.
Yeah. Let's take a look at the SPY since 2014.
I think SPY was like 180 in 2014.
Yeah.
Nailed it.
180, 190.
So,
Man.
And Starbucks was like 35 and they've gone to 99. So a little less than 3x, whereas like SPUs are almost 4x, not 4x, 3.25x.
Yeah. So these big jumps are wild to look at. Ben, let's just look at over the last couple months and see how it's been doing recently. So still a bit choppy, but what's the range here on screen? Like 94 up to 102-ish?
Yeah, 94 to 103. I wouldn't mind looking at this. I wouldn't necessarily mind wheeling this stock.
Yeah.
We're staying within this range. So I know that if I do get assigned shares, we're probably going to stick pretty close, right?
Well,
not, you're going to need about 10 grand in your account to wheel it for at least one contract. But I wonder what the premium would be on that. What was the premium for trend spread?
Well, look it up. On trend spread, it's paying $36. Let me look it up on the wheel watch list. And Ben, what's really interesting here is Walmart, my wheel stock it's this expensive now. I got to pay this. I'm paying just as much as I'm paying for Starbucks. Let's see. On the wheel watch list, Starbucks is listed as bullish moderate. Yeah, paying 36. It's the same setup. We should have known. $36 in premium at a $96 strike. So, that's a 0.4% weekly ROI. That's nice, It's not saying
and at $96 for the potential assignment price, like that's towards the lower end of the range, which makes me feel better. Now, I don't love this downward trend that we seem to be in.
No, and going strong even still maybe.
I think to be the wet blanket here a little bit, the risk on the wheel is some of those jumps that we've seen, right? Like we had some, like that downdraft in May, you're down 10%. So like, I don't know exactly what put you would have sold there, but you're probably selling the 85, 86 put and stock opens a decent clip lower. So it's a good argument to put the put spread on as part of a wheel, right? Like, have a little bit of that like extreme tail protection. But you're waiting 6 months on the other hand for this to turn around again on your wheel that you've been long since May.
Yeah, definitely. You don't want to be stuck in that type of scenario. That's just no fun for anybody. But you bring up a good point, Mark. The vertical wheel, the hedged wheel would be a great opportunity for that. And that's what you trade on behalf of people, for people that want to use bots and don't necessarily want to manage them yourselves. I don't know if you guys know this, but Mark will manage that for you.
Yeah.
Mark and Harvested Financial can manage your bots, can pick the stocks for you. They're using PeakBot's bots. So it's the best of both worlds. And you can get started with Mark in a professionally managed account at peakbot.com/harvested. You'll be sent over to one of Harvested Financial's pages where you can get your name on the list and get you started. So that way you can get your bots professionally managed by a registered investment advisor.
This is actually a great example of like a stock where I might have an override on what the bots are doing. That if you're short that put spread going into that last week of April and earnings come out and it, maybe I might not even have that on during earnings, that's kind of a primary filter, but to the extent that you did have it on in earnings, and it blows through, that's new information. That's where you might say, I'm not going to completely follow exactly the system here. I'm going to take my loss on that put spread and just move on rather than say, I don't know exactly what the context of their earnings are, but that's exactly the type of scenario where you go, you know what? We sold a put spread. We lost some money. Do we really want to be holders now that, XYZ disclosure has come out about, future revenue or whatever they said at earnings. So, I think that's kind of a good example of I don't think it's kind of a good example. I think it's a great example of this sort of manual override that I am making with some of these bots, that you let the bots do all the execution, you let the bots handle all the positions, but sometimes there are some corner cases that you've got to, as there always are with options, that you have to manage around.
Yep.
Yeah. So to the title of the today's show, does Starbucks suck? You know, these last few months are a little bit of a skid here. Okay. But as we kind of talked about, not a horrible option for the wheel, especially now that the vertical wheel has the combo spread, right? Once assigned, we're protecting once assigned as well. So I'm looking, I actually trade Starbucks in one of my other broker accounts with PeakBot. And yeah, on trend spread, I'm pretty successful. I've never been assigned on it. You know, the premium that I've collected has been between like that $35 and $55 for a weekly spread. So yeah, I like the stock. I'm going to keep an eye on it.
On that broker, Dillon, does it show you what your total premium gained over that time period was?
It's tasty. So I'll talk about it here because it's so complex. I can't read it. If it were, I searched for it on Tradier. Unfortunately, I haven't, you know, because I was going to pull that up. I haven't traded Starbucks in any of my Tradier accounts. So to answer your question, I'm sure I can figure it out. But right now, no. But anyway, so any other thoughts on Starbucks, guys?
Very expensive.
Go ahead, sorry.
Very expensive. I put it in the same category to me as like a McDonald's, that like it is, or a Subway. Not Subway, but like it's old reliable. You know what you're getting going in. You know exactly what that like. Is that coffee a little burnt for me? Yes. Like, could a McDonald's burger be a little bit better in other ways? Sure. But you know exactly what you're getting. It's consistent domestically wherever you go. It's consistent internationally wherever you go. There's a lot to be said for that. And you know, old reliable, old good old American consistency.
You know, the consistency across countries that's what really amazes me, especially with McDonald's. I have this thing that when I travel to a new country, I've got to try McDonald's in every single country, and the consistency is incredible.
Yeah, since traveling with Ben, I've now started that hobby as well, and it's a lot of fun. And it got me thinking. Internationally, I've seen a ton of Starbucks. I see no Dunkins internationally. Maybe I'm wrong about that. I feel like Starbucks is certainly more international than Dunkin' is. But we're in the Northeast here. We are in Dunkin' country. America runs, not to hijack. You know, Starbucks is, you know,
the Northeast of America runs on Dunkin's.
And Massachusetts in particular. Like, you think there are a bunch in Jersey, you go to Massachusetts and you can like step out a door and see 3 others.
New England, all of New England is outrageously covered. My only other comment on this, and I guess it goes for Starbucks, Dunkin', any other coffee shops. Do we think that you guys have simple names? So they're not often being misspelled. But I often think about how Starbucks, I think, intentionally misspells people's names. Just for this right here, for me talking about it, mentioning it, it's a conversation point. Yep. It was spelled wrong this morning for me.
How'd they spell it?
Again, that's kind of normal. Sorry, I'm losing focus. But yeah, I got a Dillon again this morning.
You need a Starbucks name. I worked with a guy for a while. There was a Terrence, and like it always got messed up, and so his Starbucks name was Jake because no one messed up Jake, and yet it wasn't also that common that you're like John or whatever, where there's going to be another Mark or John or whatever. But
it's true.
You need a Starbucks name.
I think I do.
Jake is all good and well till they come back and spell it Jayk.
Yeah, and they will. But anyway,
maybe an AE in there. Yeah.
All right. Are we ready to learn a little bit? Mark, you ready to talk a little bit about credit spreads?
Yeah, let's talk about credit spreads. We talk a lot about credit spreads here. I think, you know, if there's one thing that we talk about, it's credit spreads here.
We're built on credit spreads.
Because most of the spreads and most of the opportunity capture that we're looking at here with these bots is using credit spreads. And to be totally explicit about what a credit spread is, it's a strategy that involves selling one option and buying another. So that's the spread part, right? You have one leg that's long, one leg that's short. But in a credit spread, as opposed to their antonym, the debit spread, we're going to be selling the more expensive option and buying the cheaper option, which is going to generate a net credit. And so that could be called premium, that could be called income, that could be called, you know, generally the amount received, the credit that you're receiving from that spread. It can be 2 legs. It can be sold one call, bought a further out of the money call for cheaper. You can do multiple different legs. A butterfly can also be a credit spread. A time spread can also be a credit spread. Really, that just refers to the direction of payment from putting on that position. I think an important thing to think about, though, when you're putting on a credit spread is what does the risk look like? You're obviously receiving this amount of income. You're receiving this amount of premium when you lay out that strategy, but you're getting that exchange for bearing a risk that the market's going to go up in the case that you're short a credit call spread, or go down in the case that you're short a credit put spread, or away in a butterfly or whatnot. But that premiums received is to compensate you for bearing the risk of stock moving beyond that spread, in which case you don't lose the amount you put down in the sense or in the way that you do with a debit spread, but you actually lose the amount of the spread minus the premium you captured. So that spread limits your overall risk, but the loss is going to be, on a $5 spread, if you collect $1, your maximum loss would be $4, and your maximum gain would be that $1 premium. So the important difference there is that they're risk limiting like any spread, but that the exposure is going to be the difference between the strikes minus the amount you received, as opposed to which is the inverse of, say, a debit spread, where that's the most you can lose, the amount you pay, and you can gain the difference between the spreads. So super powerful tool here. And there are, a number of different ways we can use them.
Mm-hmm. Yeah. And I want to zoom in on this chart here, because visually, this is what a credit spread looks like. And Dillon and I, we do a webinar for basically like a automation 101 on Thursday nights, Tuesday night this week. So if you're interested, 8 p.m. Tuesday, that's tomorrow night, Dillon and I will be doing a 101 on automating options live on X, YouTube, LinkedIn, Instagram. Follow at UsePeakBot everywhere.
Nice, Ben.
Anyways, this is a visual representation of what a credit spread would look like. And in this case, this is a put credit spread. So one thing that we love to show is this is what it looks like when you open a credit spread, typically, right? This green line represents the current stock price. And again, this is the part that we love. We're already starting our position off in a winning spot. We're already winning the trade when we open the spread. Again, there's caveats to that. But what this line is representing is if the stock price stays exactly where it is and it doesn't move at all from now until expiration, we're in the green zone. The green zone is profit. Red zone is the loss zone. Green zone is profit. And we can move. That stock price could fall as far back as it can fall, and we're still going to profit the same amount. If the stock price bumps up even a little bit, we could still win. We could still win that trade. That's the great thing about selling options, is you could be wrong on direction and still win the trade. And then if the stock price keeps moving forward, of course, we get into the red zone here. Not a good red zone, but it's the red zone, and our losses are capped because of that spread that we're selling. So this is just a visual representation of a put credit spread. Call credit spread would be the exact opposite, where the profit zone would be on the right side, the red zone would be on the left side. We have iron condors where there's a profit zone right in the middle, and then 2 red zones on either side. But we'll cover all of that tomorrow night at 8 p.m. on our intro to options and automation webinar. So there's some examples here. I'll zoom in if you're interested, just to read through that. But I don't know, guys, what other comments do you have on credit spreads?
Yeah, I got one. I don't think, for me as a trader, I don't right now, and again, things evolve, and I'll talk about where credit spreads landed and how we've evolved as a company to land where we're doing almost entirely credit spreads, at least for PeakBot strategies. Okay, we have an unhedged wheel, but almost nobody uses it. For me, I trade nothing but credit spreads. I don't know when I'm going to branch out and try something else. The answer is when PeakBot automates something and I have to test it. But I trade nothing but credit spreads. I love the defined risk. I love the fact that we have found ourselves here, right? PeakBot started in equities trading. We got into options unhedged, that naked wheel, just cash secured puts and covered calls. Ben, the birth of the credit spread for PeakBot, I think we can almost pin it. Maybe not, but I can almost pin it to that Upstart earnings on the wheel.
Yeah, that was probably the breaking moment for us when we had like all of PeakBot traders were on Upstart because it was just at the top of our watch list every single week, week in and week out, just generating tons and tons of premium. This is August 2023, by the way. I'll always remember that.
We should
And
look
then
at the
Upstart. No, we don't need to look at that chart. Upstart bombed during earnings and dropped like 40% in a day. And then the stock continued to fizzle out and lost like 60% of its value over the course of the next like week or so. So everybody, there's probably still people holding that bag. That's what brought us to the point where we're like, okay, time to implement a hedge here. So that way our maximum loss could only be, 7, 8, 10%.
Yeah.
That's what I love about like credit spreads in terms of like defining your risk, is that you can really pick your tolerance, and you'd be surprised how little you can limit, or how little you have to pay to limit your risk significantly. That buying in that, long call in the wheel example, or sorry, long put in the wheel example, that like that saves you quite a bit if you have the Upstart earnings announcement, or, something, 2-3 sigma happens with a stock. And that does happen. That happens twice a year. So having that kind of long put to protect you on the downside is super valuable. And it's true of any credit spread, right? Like things zag, you're collecting premium because, there is that possibility. So super important to have that defined risk. I think in any spread you trade. On the debit side, it cheapens things too. So.
Well, yeah. And Mark, you nail it. Like specifically where PeakBot sets up that spread, right? That second put or whatever it might be, the bought put, we're selling specifically most of the time at the 10 delta, right? For our hedge. So Mark nailed it. We're not paying that much premium back in order, like the amount you're paying back for the amount of protection you're getting is outrageous. So yeah. Love me a good credit spread. Fantastic. Awesome. I think that was very helpful. What else we got? What are we moving to?
Let's look at the economic calendar for the coming week. Sound good?
Yep.
All right. Let me get my screen back up here.
This is going to be a slow week of trading. I think the next 2 weeks are going to be slow.
Just going to slosh on through these couple weeks. Well, we've got some PMI data this morning coming up after the bell, 15 minutes after the bell. Not much else going on today. Tomorrow, even though the calendar websites don't show it, FOMC starts tomorrow, and then announcements will be on Wednesday. We've got a 20-year bond auction tomorrow. So anybody that's trading Max's zero DTE strategy, the bot will be inactive tomorrow and on Wednesday. All of these other events not really sticking out to me. We're on to Wednesday now. A lot of data on Wednesday. There's FOMC, economic projections, press conference at 2:30. Jay Powell will be speaking.
That could wiggle. We could see some movement on that. I think that's probably the event of the week if I were to pin one down.
I agree. And then we got GDP numbers coming out on Thursday. So quarter over quarter GDP numbers. And I think that was the one thing that I noted for Thursday. But there is quite a bit of data flowing on Thursday. Mark, how do you feel about GDP announcements?
They feel like they should be really significant, right? You're like, what is the gross domestic product of this country? That should be a pretty important data point. But I've honestly never really I'm sure there have been, but it doesn't CPI. I can, rattle off 10 different occasions where that moved the market, or, Jay Powell, of course, but GDP's never really moved a lot for me. Now, someone could look at some data and tell me otherwise, but it's never really carried a lot of weight for me.
Yeah. I had a feeling you would say that.
It's priced in.
Yeah. So Mark, of course, for me, I've started to adopt this keep calm and condor on, as I've mentioned. Now, took a beating last week, maybe last 2 weeks. Me personally, I know I didn't have it trading coming out of the last FOMC or whatever it might, I forget exactly what it was, but I'm going to keep calm and I'm going to keep going with Condor. I know the rate of recovery it has. Ben, do you see yourself turning off the Condor heading into Wednesday then, or Tuesday or Wednesday?
I'm going to turn it off on Tuesday going into Wednesday and probably Wednesday going into Thursday.
Okay.
Just because if my positions are still open by the time JPAL talks on Wednesday, I don't want to take that risk. I'd rather I've got the mentality, yes, keep calm and condor on, but I also have the mentality of sometimes the best trade is no trade.
Yeah.
And it's a balance that we have to take into consideration. I will say that internally, and I'm gonna work this analysis this week, but we are going to run an analysis because we do have a bunch of data for our iron condor strategy now. We're going to go back in time and we're going to look at the win rates on certain event days to see how our iron condor has performed on FOMC and like just big data release days, whether that's PMI or PCE or manufacturing days I've found have really impacted some strategies. So we're going to run that analysis and we're going to keep an ongoing analysis running to determine, hey, is it actually worth turning our bot off these days? And I think the way that we're going to do that is if we have under a 70% win rate on those particular days, and there's enough days worth of data to show that, hey, there is a correlation here, then we're going to turn it off until returns on that particular event day turn around. And if they turn around and they move above 70%, which is our threshold here, then yeah, maybe we'll turn it back on for those days. So I think it's going to be a very fluid environment for when we turn off and turn on. And that's something that we're going to bake into the bot. So the bot does that risk management for you. So I'm excited to do that. I'm excited to see what we learn from that. And let's make an earmark here and bring it back on the show next week to talk about what we discovered.
Great.
Yeah, I think that's a great way to improve the overall, the premium collection is what it is. So you can't collect any more money doing the trade, but you can improve your win rate or you can reduce your loss rate. I guess those are sort of the same things, but you can reduce the amount you lose on a given day too. So I love this digging into the sort of economic events and seeing what are and aren't working. And, my other point on this is that like, even with a 70% win rate, that's a great win rate. Of course we're losing more than we win on the iron condor. That's kind of, the standard structure, but it's important to remember when you have these things, and this is the keep calm part, is that even with a 70% win rate, you can lose several times in a row. The chances over the course of a year running a condor that 30% loss rate can happen. You can get streaks of 5, 6, 7 times in a row over the course of a year of running this. So, it feels like you're crazy when you lose something that you have a 70% win rate, 5 times in a row, but that happens, even with that bias weighted coin. So it's, you can definitely improve the outcomes, but you have to remember, no matter how, good your win rate is, you're still going to have streaks of losses.
I'm so glad you mentioned that, Mark, right? And you got to be able to, push through this recovery phase, right? When people start to hurt is when they take this loss, these 4 or 5 days, whatever might string together for them, and then they don't have the capital to back it up and keep trading, right? It's like if you can sustain and keep going, you get yourself out of the hole pretty quickly. And look, we're trading one day at a time. The market is very volatile. Like things do get a little streaky. You're going to find yourself putting together really good runs on the condor and people calling us saying, my account's doubled. What's going on? And then weeks like the last 2 weeks where it might be, a little bit of a struggle city. But Ben, you got some information up here. I want you to make sure you can go.
This is just a teaser for what Dillon and I will talk about in our webinar tomorrow night at 8 p.m. live on YouTube, X, Instagram, and LinkedIn. Setting realistic expectations. Expect losses along the way. almost all of the strategies that we automate have roughly a 70-ish% win rate. And that means 30% of the time you're going to lose. We're not going to sit here and tell you that you're never going to lose your trades. We haven't developed a bot that could do that. In fact, if we did develop a bot that never lost a trade, we wouldn't share it with you. We would be.
We're all going to the Caymans to trade.
What's that?
We're all going to the Caymans and trading. If
that's right, exactly. We're automating fundamentally sound strategies here, and we're putting them into bot form, so that way you can take advantage of the rigor behind selling options and how these statistics play out. So the losses will come. That's the moral of the story here. Losses will come. Expect them. Make sure you're trading with the amount of money to handle them. I can't give financial advice, but Mark
I can, and he could not be more right. That is financial advice. Make sure to size your trades properly. That's super important part of staying in the game, right? 32% happens, a lot and in streaks, and you've got to manage that sizing, whether it's how big your overall, risk account is, how big your overall trade is. Sizing is the key to managing the inevitable variance that comes from credit spreads and, collecting premium from selling options.
And
well, Mark, thanks for bailing me out there.
I was going to say, and since you did, and since Mark is a registered investment advisor and you're interested, as we've already mentioned, in a professionally managed portfolio, just go to peakbot.com/harvested, where Mark and Harvested Financial introduce PeakBot's automation to execute trades, place trades executed through your broker account with Tradier. So if you want to sign up, we've got clients active, up and running smoothly, and the process is only getting better. So you can get on the wait list. Just go to peakbot.com/harvested. We got some information, some videos, some FAQs, and a place to get started. So,
and if you do have any questions, there's a contact button on there for me. I'm happy to jump on a call, talk in some more detail about, what the strategy is, what the objectives here are, and, sort of how we capture opportunity in the markets. It's really exciting. We've got a number of clients out there firing on all cylinders. The bots are, cranking away, and, we look forward to having, more people get in as, capacity increases.
Excellent, man. We're pumped about it. I know our clients are as well, your clients. So amazing. Again, peakbot.com/harvested. Get started, get on the wait list. You want to move up the wait list, introduce a friend, refer a friend. You guys both move on up the list. Okay, that's the fun part there. So awesome.
Hit that list.
What else? Model portfolios, how we're feeling quickly?
Sure, and then let's wrap it up. We got 15 minutes till the bell. How are you feeling this week, Dillon?
I was just looking at the SPY over the last 5 days, and the technical analysis. Looking at the chart, I feel like we're going to be a little bullish this week. It was on the 10th last week. We bounced off this 602, 603 number. We kind of bounced off of that again on Friday, and we're coming back up. I feel bullish, but my account got, took a beating, which we'll talk about daily now at 3:45 Eastern. The whole SPX Lottos thing was fun, but we want to talk more about our actual positions and our bots and everything. So we're going to be doing that daily. I'm bullish, low risk, maybe teetering low to moderate this week. That's how I feel.
Gotcha.
Ben,
I'm feeling pretty flat this week.
Yeah.
Neutral-ish. Between trend spread and Iron Condor, I think I'm actually trading a couple of Iron Condors on trend spread this week.
Okay. Neutral place.
Yeah. And then I'm going to let my Condors run today, and then on Thursday, today, tomorrow, no, FOMC is Wednesday. Today, Thursday, Friday.
Yeah. Okay. Very cool. Awesome.
I'm feeling like I generally agree. I think we're in for a pretty moderate week. I think that's my base case expectation. But I think if I were to put an options spread on, I'd want what I call the Wonder Woman, which would be short the meat. I almost want a butterfly, but then I want some long wings. I want 1x2s as my wings, because I think base case is we're going to stay basically here. But I think the 5-10 delta options are probably a little cheap. And that if we move, I think we could really move. And that goes for both directions. I think this kind of time of year, especially as we've had a pretty significant run up, considering what Powell might say, we could set, a rocket into the end of the year Santa Claus rally where we gain another 3 to 5 points in the SBX. Or we could have a bunch of take profit and rebalancing and reallocation from everyone that's made money in their equities in 2024. So I think the slipperiness at the wings is there. So if you're looking to put something on in the play account, I like lifting some of those teenies in this market.
Love that take. Fantastic. Well, gentlemen, another fantastic show here this morning. SBUX finished it. Kind of want another, won't do it because don't want to be homeless. So appreciate everybody tuning in. The PeakBot team will be live at the end of the day today to take a look at our trades and our automated portfolios and a couple other things. And of course, we're live here on the Tradier Hub Fridays at 11:55, just shy of noon Eastern, for some hands-free trade and a number of other things, PeakBot picks. So Ben, you gonna ready to get us out of here?
I think the production team is going to handle that.
Oh, all right, here we go.
Yeah. Hey, now hands free.
Hands free. Thank you guys for tuning in. Almost 500 live viewers this morning. Thank you so much. And as always, we'll see you at the peak. Take care, everybody.
There's.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one. You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.